Hey everyone, let's talk about investing. Today we're looking at two big names, the All Ordinaries Index and the S&P 500 Index. Think of these indices like scoreboards for a bunch of stocks. They tell us how well the markets are doing. The All Ordinaries Index is all about Australia. It tracks the top 500 companies on the Australian Securities Exchange. When the Australian economy is strong, this index usually goes up. Now the S&P 500 index is all about the US market. It follows 500 of the biggest companies in the United States. This index is a big deal for investors worldwide. Both of these indices have done really well over the long haul, but the past 6 months have been a bit bumpy. Let's take a closer look. The All Ordinaries Index has been like a roller coaster lately. Over the last 6 months, it's been up and down. One big reason, commodity prices. Australia is a big player when it comes to commodities. It produces a lot of iron ore, gold, and other raw materials. When prices for these commodities increase, the Australian economy benefits. We've also seen the Reserve Bank of Australia, RBA, raising interest rates. This has put a little pressure on the All Ords. Higher rates can slow down the economy, which can make investors a bit unsure. The S&P 500 has also had its fair share of difficulties. The tech sector, a major part of the US economy, has been a bit shaky. High inflation is also a concern. The Federal Reserve, the Fed, has been raising interest rates to combat inflation. This can be beneficial for the economy in the long term, but it can also make investors hesitant in the short term. Despite these hurdles, the S&P 500 is still a major player in the market. So, what are the experts saying? Analysts have been keeping a close eye on both the All Ords and the S&P 500. They're looking at factors like economic growth, interest rates, and how much companies are earning. The outlook for the next 12 months is a bit uncertain. Some analysts are hopeful, predicting moderate growth. Others are more cautious, highlighting potential risks like inflation and slower global growth. It's important to remember that investing always carries some risk. It's crucial to stay informed and be ready for whatever happens in the markets.